Everybody, so let's take a little look at Apple today. Apple did have a little bit of a down day, down $3.71, just over 2% on the day. So we did close at 175.74. I know a lot of people on social media and just you in general, if you are trading Apple, you have been watching this monster move that Apple has done. You could be getting a little nervous thinking that it's coming all the way back down. The market's going to roll over and crash. Here's what I have pulled up on the screen right now, and that is the weekly chart on Apple. If we just look at the weekly time frame on Apple, does anything about this chart look bearish at all? Okay, so we did have a red close today. So I guess if you are like some sort of, perma bear and you believe that everything is going to zero, you would say, oh, we got our first red day close, this thing's coming all the way back down. But when you really look at it, coming back all the way down where? I mean, the actual breakout on Apple was here, this 152.50, 150, 155 area. We're currently traded to highs today of 182.13. So anybody complaining about that we put in a little bit of a breath today, is just, it's absolutely ridiculous. When you really look at it in the big picture of things. Now, maybe if you're a day trader or a scalper, and yes, you thought that this was going to push through 182 and it was going to go to 185, and then now you got caught in this little bit of back trace here. Yes, you're feeling a little bit of pain. Maybe you should exit that position, and reevaluate what's going on in front of you on a day-to-day basis. So if we do just pull up the daily time frame here, you can see this chart here, if we just go back, this 153.35 breakout, 152 area, 155 area. I mean, this thing has been flying high realistically since November the 17th. If we look at today's red candle, yes, could this be a little bit of a blow off top candle here? Are we coming down to test some of these lower supports here, which Apple hasn't done in a long time? We do have a gap to fill down here between 165 and around 170. But if you look at it, we are still over the 5-day moving average on Apple. Guys, I mean, we have not even closed below the daily 5-day moving average. And if you know anything about trading short-term sentiment, the 5-day moving average, that's the nearest term sentiment, meaning that if you're a day trader, a scalper, a weekly swing trader, you are going long if the stock is over the 5-day moving average. Now, we did have a lot of put buying for 170 puts on Apple for this Friday's expiration. I know we have FOMC on Wednesday. We have monthly options expiration on Friday. Things could be very, very choppy. Could it come in possibly to pull into this 170 level? And I'm just going to draw a trend line here. Could it do that? Absolutely, guys. Absolutely. Would it be horrible? Would it be horrible if Apple did that? Absolutely not, guys. I mean, if what you want to really look at here is if we do lose 175.36 on a daily close or even intraday, we could look to take some positions down here into the 169, 170 area. I think that the market makers are given a 7 or 8 point move expected before Friday. So could they pin this to 170? That's entirely possible. Could the Santa Claus rally still be on heading into the end of this week and next week and into the first week or two of January? Absolutely. And if Apple's going to go higher, it can't just keep constantly making new highs, new highs, new highs, new highs. It does need to take a breath. It does need to consolidate. I'm just going to say like this. If you do play both sides of the market, if we do lose this 175 area, we are going to have room down to 169, 170. Okay. Take that trade with precautions and do what you want with it. If we do get into this 168, 170 area, and the market starts to curl back around, looks like we're going higher, great opportunity to bounce this stock. Great opportunity to ride this potentially back into 180, 185 heading into January. Guys, I hope that helps. Relax, stay patient. There's no need to force trades. The market is going to continue to be open tomorrow. Stocks are going to continue to move higher. Stocks are going to continue to move lower. You're not going to miss out on anything if you sit back and just kind of watch the price action. If you feel uncomfortable, it's not the end of the world. If you are holding long positions, the only thing really getting majorly hit right now is high growth stocks. Anything that did phenomenal in 2020 during COVID, these speculative stocks, these high growth stocks, these, SPAC deals, all that type of stuff. The IWM, they're in their own bear market right now. That's a completely different story. But if we're talking about the S&P 500, we're talking about the NASDAQ 100, the triple Qs, the SPY, completely different ball game here. We are still, in a uptrend. We're still in an uptrend. So guys, until we start losing the weekly 20 moving average on the triple Qs. Nothing to be bearish about. Now, am I a perma bull? Absolutely not. If the triple Qs start to lose that weekly 20 moving average on the weekly time frame, all bets are off and I'll be looking to short this market. Okay. But until then, I'm still looking for stocks to come into support, things that are going to look good for a rally the next 2 to 4 weeks, heading into realistically around the middle of January. I hope that helps. If you did like this video, please do me a favor, subscribe, like, comment, also join my Discord. That link is down in the description box below, and I will see you guys all on the next video.